Last November, someone in Toronto's Annex put their house up for sale. They asked for $2,988,000. Just 3 weeks ago in July, it sold for $1,725,000. That's not a typo. That home sold for over $1.2 million less than the seller was asking. That's only 78% of the asking price. And here's the thing, that seller is not alone. And they are not even the worst story I'm about to show you. I found 4 homes that actually sold this July right here in Toronto, Richmond Hill and Vaughan. Those homes are semi-detached, detached, townhouses, and you are going to be surprised because these are real streets and real numbers. And they all tell the same thing about this market, one number at a time. So prepare to be amazed as I reveal the one number that will truly astonish you from July Trap Report. And by the end of this video, you will have my honest answer to the question I get it all the time. Is this the bottom? So stick with me because the answer changes what you should do right now. Let's start with the hard truth. And I'm not going to sugarcoat it. For 3 years, whatever home sellers asked, they pretty much got it. That market is over and done. This July, buyers only paid what a home is really worth, not what the seller wished it was. Let me show you what that looks like on 4 real homes. The first home is a semi-detached. This Annex semi-detached first hit the market last November for just under $3 million. Nobody bought it. The seller dropped the price to $2.65 million, and it's still nothing. They took it off the market, waited, and relisted it in April for $2.2 million. Then in July, it finally sold for just $1.725 million. That's only 78% of the asking price. Trap just released its July market report, and here's the number behind that story. Across the GTA, semi-detached home prices fell 7.4% year over year, the biggest drop of any home type. So the owner of that Annex home did not just have bad luck, they owned the hardest hit property type and spent 8 months fighting a market that already made up its mind. The second home is a detached house in Richmond Hill. The owner first tried to sell it in 2022 for $3.2 million. It didn't sell. Then it tried again in 2023, then again in 2024, and each time the listing expired. This year they came back at $2.5 million, reduced the price twice, and finally sold in July for $2.3 million. So according to Trap July reports, detached home prices are down 5.1% year over year. And the average detached home in the GTA now sells for around $1.29 million. But the real story is the timeline. This seller held on to a 2022 prices for 4 years and eventually sold for $900,000 less than they originally wanted it. So the 2022 market is not coming back to rescue sellers who refuse to adjust their pricing. Sorry to say that, but this is the reality right now. Next is a large luxury townhome in Richmond Hill. This one shows exactly what happens when a seller keeps chasing the market down. It was first listed in April last year for $1.65 million. The listing was terminated, then relisted. At one point, they dropped the price to $999,000 to attract buyers, then raised it right back to $1.6 million. After 15 months of going on and off the market, it was finally sold this July for $1.279 million. According to Trap, July report townhouses prices are down 3.9% year over year, with the GTA average sitting around $817,000. But the real story is what waiting cost this seller. They sold it for $371,000 less than their original asking price. While they kept holding out, the market kept moving further away. Here's another Richmond Hill townhome. And this one is closer to the price range many buyers are actually shopping in. It was listed last July for 1.168 million. They got no buyers. Then the seller dropped the price to 959,000, but it still didn't sell. They even tried to rent it for 3,400 a month, but that didn't work either. So finally, they came back at 849,000 and it sold for 890,000. The property spent 272 days on the market. To put that into perspective, the average GTA home now takes around 45 days to sell, and that already 12.5% longer than last year. This seller waited 272 days, but here's the interesting part. Once they lowered the price to where buyers saw value, the offer came in. It sold for 41,000 over the final asking price. So when you price your home at today's market, you will see the buyers will show up. But if you price it like it's still a 2022, you could be waiting a really very long time. So that's what July really looked like. Not just numbers in real report, but real homes and real sellers. Trapp says the average GTA home price is down 4.5%. These four cells show you how that happens. Now let's talk about the average price, because this could soon become a very big headline. The average GTA home price is now $1,03,956, less than $4,000 away from falling below $1 million mark. Think about what happens next month if you see this number 998,000. That would be very interesting. And here's what most people don't understand about that average. It's a story about what sold, not what homes are worth. If July has lots of condo sales and a few detached sales, the average drops, even if not a single home lost value. So the mix of the property moves the number. That's why Trapp board also tracks the price index. Think of it as comparing the same house to itself over time. And yes, that index price is down too, about 4.6% for the year. So prices really are lower than last summer. Both numbers agree on that. But here's what surprised me. In July report, that index number, the true honest number, actually ticked up from June. I know 1 month does not make a trend, and I won't pretend it does, but it's the first green shoot I've seen in a while. Remember that seller from story 4? The one who got so frustrated, they tried to rent their townhome out instead of selling it? Hold that thought, because it's the whole story of July. Last July, there were 17,623 new listings. This July, 14,484. That's a 3,139 sellers who this year looked at the market and said, no thanks, not at these prices. Where did they go? Exactly where that seller almost went. Some looked at what homes are actually selling for, decided they weren't giving theirs away, and they stayed put. Some turned their homes into a rental. Some pulled their listings to try again next spring. And added it up, the total number of homes for sale is down 12% from last year. Now watch what that does underneath that falling prices. Last July, buyers bought about 34 of every 100 new listings. This July, about 41 of every 100. Fewer homes, same number of buyers. The market is tightening while prices are falling. And almost nobody believes those two things can happen at the same time. If this keeps up, buyers will find less room to negotiate, not more. And I want to tell you something I've noticed. I have watched a few of these standoffs between buyers and sellers. They never end with crash, and they never end with boom either. They end quietly. Sellers stop showing up. The good homes that are left got bought. And one morning, a buyer opens the app, scroll for 10 minutes, and there's just nothing worth seeing. The standoff ended. All right, the question everyone came for, is July the bottom? The honest answer, nobody knows. Not me, not the bank economist, and anyone who's certain is selling you something. But let me tell you something. Bottoms leave clues, and July left 4 clues. The first one, sales stopped falling, basically flatter from last year. And adjusting for the season, sales actually rose from June. The second clue, supply is drying up fast. New listings down almost 18%. That's the 3,000 sellers. Third clue, the price index ticked up from June. First time in a while. Fourth one, the board itself says if this continues, prices could level off in the second half of this year. Now the other side, because you deserve both sides, Toronto unemployment is 7.2%. A typical 5-year fixed rate is still around 6%, and the economy is genuinely uncertain. And you saw those 5 sales. Sellers who overpriced are still getting humbled today. If September brings a flood of new listings, all this bottom talk dies fast. I'm not here to convince you to buy. Sometimes waiting is the smart move. But here's what I would actually do, depending on who you are. If you are a first-time buyer planning to move in the next few months, get your pre-approval done now. A rate hold costs you nothing and it protects you. Then shop while sellers still negotiate, because you just watched what the still negotiating looks like. Homes selling 10, 20, even 22% under asking. That window is real right now, and the report says it may be closing. If you are trading up, this is the part nobody talks about. When the whole market is down, the gap shrinks. The home you are selling lost less in dollars than the bigger homes you are buying. You sell a little low and you buy a lot lower. Down markets are trade-up markets. And if you are downsizing, it's tougher, I won't lie. Price your home to today's buyers, not last year's. You saw what happens to the sellers who don't. And lean on the fact that good homes are genuinely scarce right now. So I want you to remember what July actually told us. The market stopped paying for the prices sellers wished were true. The ones who fought that lost hundreds of thousands and months of their lives. And the 3,139 sellers looked at all of it and quietly walked away. That's not a crash, that's a market finding its floor. If you like this video, I would highly appreciate if you like and subscribe. And thank you for watching, and I'll see you in the next video.